What's up, everybody? This is Sungko, the Korean bro. Today is 2023, June 27. Let's look at articles, okay? Hmm. Stitch Fix is in a bind, and AI probably can't save it. Three things investors should know. Carnival stock is getting dumped even after record bookings. Time to buy. Beat the Dow Jones with this cash gushing dividend stock. These diversion predictions pose a big challenge for oil stock. And let's see what else we have. The Nvidia rival could become the next hot AI play, and it is way cheaper. Hmm. Alphabet, Amazon, Tesla, Nvidia have split their shares. These four companies should be the next stock split seconds. Hmm. Okay, Stitch Fix is in a bind. AI probably can't save it. Three things investors should know. Stitch Fix suffers from a weak competitive moat. Its financials continue to deteriorate. Stitch Fix has a new CEO, but he faces a daunting challenge in turning the company around. Carnival stock is getting dumped even after record bookings. Carnival stock has nearly doubled this year on a rebound in cruise demand. The company still faces a heavy debt burden. If Carnival can hit its new 2026 targets, the stock should be a winner. Hmm. Is Carnival stock a buy? While the cruise line stock has soared this year, it's still down significantly from historical levels. The stock has fallen by more than 80% from its all-time high in 2018. It is off more than 70% from where it was trading at the start of 2020, before the pandemic started. That's a sign there is still a considerable upside if the company can get its financial house in order. Management aimed to reassure investors on that end by introducing its SCA change program. A set of 2026 goals include increasing EBITDA per available passenger berth, day available lower berth day by 50%, and more than doubling adjusted return on invested capital to 12% from 2023 to 2006. The company offset is expected to approach an investment grade leverage ratio by the end of 2026, which is generally understood to mean a debt to EBITDA ratio of 3 or less. If Carnival can hit those goals, the stock should be a winner over the next few years. It's unclear if the current wave of record demand will persist, but trends like remote work and baby boomers entering retirement should support continued revenue growth for Carnival. Mm, let's look at AMD. Advanced micro device. Okay. Okay. The market for AI chips is big enough to supercharge AMD. Okay. According to AMD CEO Lisa Su, AI is the largest strategic growth opportunity for AMD. She estimated the market for data center accelerators such as GPUs, data processing units, and other types of processors could jump from a $30 billion in 2022 to $150 billion in 2027. NVIDIA is dominating this massive market. Hmm. But there is space for another player, such as AMD. This is evident from reports that the waiting time for NVIDIA's data center GPUs ranges between 3 and 6 months. The company is reportedly unable to keep up with the huge demand for its GPUs, which are deployed for training AI models. It is scrambling to place more orders with its foundry partner to ramp up output and satisfy customer demand. However, the shortage of NVIDIA's data center GPUs has led it to sharp price hikes, as these chips are reportedly commanding a 40% premium over the MSRP. AMD can fill this void and capitalize on the multi-billion dollar AI chip market. The company is on track to launch its MI300 family of data center GPUs for AI training and inference by the end of 2023. These chips are already attracting customer interest, which isn't surprising as AMD is going all out to capture the AI chip opportunity. For instance, AMD recently revealed the Instinct MI300X data center accelerator, which it claims is the world's most advanced accelerator for generative AI. With 192 gigabytes of high bandwidth memory, it is not surprising to see why AMD is making such a claim, as this spec exceeds NVIDIA's H100 data center GPU's 120 gigabyte memory capacity. AMD management points out that the more memory will give data centers the compute and memory efficiency needed for large language model training and inference for generative AI workloads. The chipmaker intends to start sampling these chips with customers in the third quarter, so AMD's growth could start accelerating once again from the end of 2023, assuming its AI-focused GPUs are hit with customers. We have already seen how fast the AI accelerator market is expected to grow, and the amount of revenue it is expected to generate. Success in this market will be critical for a turnaround in AMD's fortunes. It looks like Wall Street is expecting the company's move in this space to pay off. Investors can expect better time after woeful 2023. According to consensus estimates, AMD's revenue in 2023 could fall 2.5%. Its earnings are expected to drop to $2.86 per share. However, the next 2 years are looking relatively better for AMD as per estimates, with the company expected to deliver solid double-digit growth. However, AMD may be able to outpace Wall Street expectation if it can hit golden data center accelerators. Nvidia has already used this opportunity to execute a major turnaround, and AMD could replicate its bigger rival speed. That's why investors looking to buy a potential AI winner trading at a cheaper multiple should take a closer look at AMD. The company sports a price sales ratio of 8, which is significantly lower than Nvidia's, while AMD's before P/E ratio of 39 indicates that investors are getting a good deal on stock right now, given the massive AI opportunity that lies ahead. Hmm. Alibaba, Bank of America, CVS Health, Microsoft, MasterCard, Palantir. Okay. Wall Street analysts think Palantir is due for a 41% drop. Are they right? Palantir entered the year at a low valuation. Quarter first results were good, which sparked investor confidence. Wall Street analysts' price targets are for 1 year, so long-term investors shouldn't make it a deciding factor. Palantir stock has seen a massive run of Palantir Technologies, but it isn't without cause. Looking at Wall Street analysts' 1 year price target can be a good exercise when investing in a stock. While it shouldn't be the end all decision on establishing a position, it's nice to understand what others are thinking about a stock you would think will go up. As for Palantir, 12 Wall Street analysts have a median price target on Palantir stock of $8.25, indicating a 41% drop from today's levels. That's obviously a big warning sign, but are they right? Let's take a closer look. Palantir's business demand has generated impressive gains. Palantir has been one of the primary names investors have taken on interest in since artificial intelligence has become a significant investment theme. Its products heavily utilize AI and allow its users to input information and then receive actionable insights on how they should act on the information as it comes in. Primary names investors have taken interest in art since artificial intelligence has become a significant investment theme. The solution has been deployed to various governments, as well as for commercial applications. Yes. Heavily utilize AI and all its users input information and then receive actionable insights on how they should act on the information as it comes in. With the stock up roughly 120% year to date, it has already seen an incredible run. Still, by some measures, this run up should have been expected because of the low valuation it entered the year at. When a high margin software company trades at 7 times sales, it's usually because investors have lost faith or are concerned about future growth. Until Palantir's quarter first earnings report was released on May 8th, it didn't have enough growth to warrant a higher valuation, but with management saying unprecedented demand for its AIP product, investors got excited. Furthermore, Palantir increased its earnings guidance from profitable for all of 2023 to profitable every quarter in 2023. Mm. As a result of its profitability and bullish outlook, the stock rallied 124%, although that number has come down to about 90% in the past few days with some stock weakness. As a result, some of Wall Street's estimates have gotten slightly outdated, with a few analysts not updating their guidance since the positive news was delivered during the quarter first report. However, a handful of rating agencies like Goldman Sachs, Citigroup, and Credit Suisse have updated their price targets but remain well below where Palantir is trading now. Okay, Palantir. So far, the information that I've received are like this. A data analytic program like the one Palantir offers can do the sorting better and provide the information needed to make the best decision in a timely and accurate manner. The software was initially developed to help government agencies, but it has now reached the public sector. Palantir's newest product is its artificial intelligence platform AIP, a large language model that allows users to ask a chatbot a question. It answers clients can deploy this add-on to the company's other products and receive actionable insights. Its product heavily utilizes AI, and all its users input information and receive actionable insights on how they should act on the information as it comes in. Okay, let's go find Pinterest. Okay, Pinterest. Hmm. The idea behind machine learning is use sample data to train computer programs to recognize patterns based on algorithm. Machine learning program allows computers to do things without being programmed. The efficiency of machine learning generally depends on the algorithm. A relatively common use of machine learning happens if you have a Pinterest account. The image sharing and social media website began using a machine learning with the acquisition of Kazaa in 2015. Since then, it's employed machine learning to help users discover content, moderate spam, and direct advertising and target newsletters. So Pinterest uses machine learning. Okay, so I get it. Why is everyone talking on Pinterest right now? Okay, Pinterest. Let's read two articles about Pinterest. Okay, Pinterest continues refining the technology its ad customers use. Hmm. The company is also increasingly partnering with publishers and even competitors to better monetize the platform. Presuming a new bull market coincides with robust economic growth, Pinterest outlook is much stronger than its recent past. Presuming a new bull market coincides with robust economic growth, Pinterest outlook is much stronger than its recent past. Investors haven't yet seen the quirky social media sites' new growth initiatives operate at their maximum potential. Okay, whether the rally since the end of last year marks the beginning of a new bull market is in question. There is one certainty though: a new bull market is coming sooner or later. Probably sooner. You are better served by being in the market at the beginning than chasing one after it's begun. And one name you might want to start next bull market with is Pinterest. It's a curious company to be sure. While categorized as social media platform, Pinterest is slightly different than leading names like Meta's Facebook or Twitter. The whole idea is that its users pin things they like to one of their topically organized digital bulletin boards and then share those boards with other like-minded people. Pinterest makes money in this process by injecting the occasional advertisement into the results of user searches. While the platform is well appreciated by its 463 million users, the number has not grown much since the COVID-19 pandemic wound it down. Revenue growth is slowing to a crawl, too, and investors can't help but notice that the company is moving deeper into the red. The slide follows the brief period of profitability it achieved at the height of the pandemic, when the world was largely stuck at home and leaning heavily on the web for entertainment. Turning up the heat on tech that drives revenue. The website has always been mindful that brand needs responses to the ads they're paying Pinterest to post. But the company has only recently taken the value it offers advertisers to the proverbial next level. For example, in October, Pinterest unveiled a suite of new tools that specifically allow an advertiser to identify new search trends, decide and measure responsiveness to the advertising they're paying for. The earliest users of these tools saw a 36% increase in conversations that are attributable to a particular product or type of ad. The new trend spotting tools help advertisers identify seasonal spending and break down Pinterest audience by age, time, and location. Travel catalogs, as the name suggests, are digital catalogs aimed specifically at users planning a potential trip. These consumers are likely to be in the market for some very specific goods and services. The Premier Spotlight is a turnkey solution allowing advertisers to feature video ads on the Pinterest search page while also offering the option of a large format ads on mobile devices. The company is leveraging business building partnerships. Pinterest evolutions aren't just technological, they're strategic too. Namely, it's embracing traffic driving partnerships with competitors. Traffic driving, traffic driving. Case in point, in April, the company announced it would start allowing third party ads at the site. It would start allowing third party ads at the site, beginning with ads from none other than e commerce powerhouse Amazon. Business building partnerships. Turning up the heat on tech that drives revenue. It's not just Amazon, however, in January, Pinterest and media outfit Condé Nast teamed up to make 160 videos aimed at the fashion and home decor markets. And late last year, the company partnered with Warner Music Group to allow users and creators to add even more royalty-free tunes to their digital bulletin boards. It ramped up its monetization efforts at the unlucky time. Well worth the risk foremost. Is this stock a perfect pick for everyone's portfolio? No. Pinterest still brings some risk to the table. Competition in the social media space could draw users away from Pinterest, and the barriers to entry in the web space are pretty low. After all, particularly for companies with an existing web presence, on balance, though, Pinterest's potential reward is greater than its prospective risk. If you can stomach above average volatility stemming from uncertainty for a while, this is a long term pick that's worth the bumpy ride. Integral as Science Holding. Okay, Integral Ad Science. After seeing advertising stock, Podomatic pummeled. Mm, and this good news looks likely to continue in the new year, commenting that quarter four set the company up for a solid start to 2023. CEO Lisa predicted that the sales will grow about 15% or 16% in the first quarter to $103 million. For the full year, management forecast sales between $453 million and $463 million, basically in line with analyst expectation for $459 million. Management did not give a prediction for profits, but Wall Street is optimistic that growth there could be even better than the sales number. Quarter first earnings are only expected to be about zero point zero 0.01 currently, but if sales exceed that estimate, it stands reason that IAS will bid on earnings next quarter as well. Furthermore, Wall Street sees IAS earnings $0.15 per share though the end of the year. Hmm. But let's read this one too. Pinterest. Consider Pinterest a technical and AI stop. It could increase its appeal by helping users cope with the rise of AI. With technology, one's value in the marketplace will likely depend increasingly on creativity. Since users turn to Pinterest to search for inspiration, the platform should draw growing interest. Also, thanks to Raddy's efforts to better monetize the platform, the expanding user base has resulted in rising revenue, which should eventually lead to increased profits. Thus, Pinterest stock could not only make gain because of AI, but also benefit those trying to circumvent the technology. Let's read a trade desk. Trade desk. The Trade Desk is a prime beneficiary of the connected TV megatrend. Accomplish privacy preserving identity solution is quickly becoming the industry standard. Privacy preserving identity solution. Artificial intelligence could be another powerful growth driver for the digital advertising specialist. The ad tech leader has a long runway for expansion still ahead. Platforms that bring buyers and sellers together can be extremely lucrative investments. That's particularly true when they benefit from powerful long-term trends. A Trade Desk is one such a company. The cloud-based advertising platform helps business optimize their ad campaigns, which in turn brings more revenue to publishers and other ad sellers. The Trade Desk platform-based business model delivers fortune-building gains to its investors, and it's likely to continue to do so in the years ahead. Here are three reasons why the digital ad specialist stock is still a great buy today. Digital ad specialist stock. Digital ads. The connected TV mega trend is fueling the Trade Desk growth. Cord cutting is reshaping the advertising industry. Cord cutting. As eyeballs shift from a traditional cable and broadcast TV to streaming services, marketers are redirecting their ad spending to meet their customers where they are. As I will shift from a traditional cable and broadcast TV to streaming services, marketers are redirecting their ad spending to meet their customers while they're the trade has helped enable this global shift from a linear to connected TV. The advertising technology platform provides the tools to companies need to better target their digital marketing campaigns, increase the returns on their investments. The trade has helped enable this global shift from a linear to connected TV. This global shift from a linear to connected TV. The advertising technology platform provides the tools companies need to better target their digital marketing campaigns and increase returns on their investments. By matching ad buyers with sellers of ad placements across a wide variety of formats, the Trade Desk is set to capture a large share of global digital ad market that's projected to top $1 trillion by 2027, up from a roughly $700 million in 2023, according to Statista. Setting the standard, the Trade Desk market share gains are evident. Its revenue jumped 21% year over year to $383 million in the first quarter, even as the overall ad market remained sluggish due to recession fears. Investors can expect the trade desk to continue to outperform as more ad dollars shift to digital channels in the coming years. The trade desk is setting the standard. With privacy concerns mounting, the trade desk strives to be part of the solution. Its unified ID 2.0 initiative is quickly becoming the industry standard for accurate and secure identity solution. UID2 enables advertisers to effectively target their ads and measure up performance while preserving the privacy of consumers. Uses encryption and other advanced security techniques to safeguard identifying information in a way that's widely viewed as a superior to advertising cookies. Trade Desk has built an impressive list of partners, including Comcast, NBC Universal, AMC Networks, and Paramount Global. Investors should expect this list to continue to expand as more companies come to understand the benefits that UID2 provides. AI should be another powerful growth driver. The Trade Desk is also using artificial intelligence to provide more value to its customers. Earlier this month, it debuted its Kokai Media buying platform. The system uses AI to help marketers glean valuable insights from millions of ads impressions in real time. Hmm. Kokai Arts provides upgraded measurement and forecasting tools delivered via an intuitive user experience. The Trade Desk in turn can now make it even easier for its clients to serve more relevant ads to finally targeted audiences. at times most likely to result in sales or other desired customer actions. Upgraded measurement and forecasting tools delivered via an intuitive user experience. The trade desk in turn can now make it even earlier for its clients to serve more relevant ads to finally targeted audiences. Benefits from a rich yet highly complex data set with very high integrity, CEO Jeff Grin said, with Kokai, we're able to help our clients make sense of that data with AI and help the marketer make the best decisions at every turn. Additionally, the trade desk sadly expanding partner network enables ad tech companies to seamlessly integrate their offerings into its Kokai platform. The trade desk intends for its partner to serve as an AI innovation hub for the digital ad industry. Over 400 businesses have already signed up as partners. With AI set to power the next leg of expansion, the trade desk stock price should continue to climb to new heights in the years ahead. Okay, I get it. So the trade desk, prime beneficiary of the connected TV megatrend, privacy preserving identity solution is quickly becoming the industry standard. Cord cutting is reshaping the advertising industry. Its Unified ID 2.0 initiative is quickly becoming the industry standard for accurate and secure identity solutions. UID 2 enables advertisers to effectively target their ads and measure performance while preserving the privacy of consumers. It debuted its Kokai media buying platform. The system uses AI to help marketers to glean valuable insights from millions of ad impressions in real time. Hmm. Still has plenty of irons in the fire as the ad tech market expands. Plenty of irons in the fire as the ad tech. The stock could easily triple gain over the next 6 years, but it probably won't replicate its post IPO performance. So, last but not least, this is going to be the last article that I'm going to read. So, uh, hmm. Okay. If you had invested $25,000 in the Trade Dash initial public offering in 2016, your investment would worth $107 million today. The ad tech company delivered that return because it grew like wood. From 2016 to 2022, its revenue had a compound annual growth rate of 41%. As it adjusts earnings before interest, taxes, depreciation, and amortization had a CAGR of 47%. You might be kicking yourself for missing out on those millionaire making gains, but the stock could still have plenty of room to grow. Let's take a look at its core growth engines to see if it can replicate those massive gains. The Trade Desk is the world's largest demand side platform for digital ads. World's largest demand side platform. Demand side platform. It's demand side platform. Okay. DSPs enable advertisers to buy ad space across desktop, mobile, and connected TV platforms. They sit on the opposite end of the supply chain from a supply side platforms like Magnets, which help publishers sell their own ad inventories. The Trade Desk growth was primarily driven by three catalysts over the past several years. First, it carved out the share as a compelling alternative to Alphabet's Google and Meta platforms. In the saturated digital advertising space, Google and Meta both bundle together DSPs, SSPs, and other tech tools in a single platform, but their ad tool lock advertisers into their walled ecosystems. The Trade Desk enables advertisers to break out of those walls and purchase ads across the open internet of websites, apps, and streaming video platforms that aren't tethered to Google, Meta, or other big tech companies. Okay, this is it for today, and I'll see you guys tomorrow, okay? Bye bye.